Hello guys and welcome. In today's episode we are looking at how the mainstream are responding to Bitcoin and seemingly warming to it, as well as how this rally is continuing to exceed expectations and where it might be heading according to a few analysts. And yes, Bitcoin volatility is certainly back on the table today. We spoke about this in yesterday's video, discussing how this move up was catalyzed by a devaluation of the Chinese yuan. And apparently Bitcoin wants to keep going, breaking through 12k yesterday. Right now we've had a bit of a pullback, quite a significant one, but we'll get into the technical opinion later. For now, let's have a look at what's supporting this rally. So Bloomberg analyst Mike McGlone believes that the current run is being propelled by the futures markets, some of which are showing a premium for Bitcoin today, especially the CME futures. And McGlone suggests that this is due to a growing interest within buying and holding BTC, with mainstream adoption continuing to grow alongside this as a result of interest within the industry. And that is certainly what we're seeing, so much so that Peter Schiff, a well-known Bitcoin detractor, is getting a little bit frustrated with it, pointing out that CNBC's increased coverage of this rally is tantamount to shilling Bitcoin. Now, the thing to note with people like Peter, and I guess it works in the same way with people like me who support an obvious predilection towards a certain asset, you always have to look at what they're gaining. And for Peter, he's a well-known propagator of gold. And arguably, gold and Bitcoin are in competition, especially in the wake of this newfound instability within the Chinese economy. And to argue that these gains are from Bitcoin are simply from speculation as its use as a safe haven rather than actually being used in that way is pretty ludicrous. But Peter is right in one thing, and that is CNBC have been Bitcoin crazy, recently giving the spotlight to analysts such as Tom Lee, who noted that despite Peter's call to the contrary, Bitcoin is in fact a hedge against global risks. So Lee elaborated on this, saying that due to Bitcoin's inverse correlation to the US dollar, it's acting as a great tool for diversification, especially in instances of economic instability. Right now, this is obviously seen within the US-China trade war, and essentially these are becoming propellants which could lead Bitcoin to new highs.
So global turmoil, volatility in the equity markets, a currency war, those would all be good things for Bitcoin, and yet you don't necessarily think that, for instance, there's a currency war that's going to happen. So why do you think Bitcoin is going to launch to new highs on the back of all this?
Yeah, well, Bitcoin's done something pretty interesting this year. Last couple of years, it's been really correlated to dollar. So weak dollar has been good for Bitcoin, strong dollar has been weak, and it's been really correlated to risk markets. This year, it's delinked from the dollar because the dollar's been strong, Bitcoin's been up, which is a real breakage. It's gone negative on correlation to the equity markets, and now it's positively correlated to gold. So I think Bitcoin is proving itself this year to be a hedge against global risks. I think that makes it an authentic institutional source of diversification. I think that's going to help it propel to new highs.
So another person that believes that Bitcoin is a good hedge against failing economies is Don Steinberg, the CEO of consultancy firm Agecroft Partners. Now, interesting to note here that this is not a crypto firm. It's an award-winning hedge fund whose very job it is to find assets that will continue to perform for their clients. Steinberg noted that Bitcoin is one of these assets. And that it's fantastic tech that was here to stay, and most bullish of all, would become a large part of most hedge funds' portfolios.
It's been on an amazing run. It's fantastic technology. It's not, some people are using it as a way to hedge against inflation. Right now, I think it's, fairly expensive. It's very hard to value, but, Bitcoin is going to be here for a long time, and I think long-term it will be part of a lot of hedge funds' portfolios.
Now, moving on to the slightly more technical opinion, and as of time of recording, we have actually dipped below 12k, but one analyst actually projected this, suggesting that a pullback to 11.8k was to be expected, and a continuation onto 13k could occur, but only if we hold these levels. If not, it's back down for BTC. So we actually did break below 11.8, but it is clambering back up now and holding slightly at that level. Another analyst suggested, much like we mentioned, that the CME futures was leading the pack and that this could indicate further upside. And as for a continuation, Chepicap's own analyst David Borman suggested that after 12k there is very little resistance until previous yearly highs. So provided we can get back above 12k today and hold there, we could see 13k pretty soon.
And push up, and that'd be the bull scenario that would bring us, there's not a lot of resistance between here and basically the recent highs around 13.5, which is also the 0.618 Fibonacci retracement level. So yeah, watch for, if we have a solid break basically above 12,000, we're probably going to run up to there pretty quickly. If we get rejected and start pushing back down, we do have a lot of support layers to get through. We've got 11,000, I think will be the first major one. We've got this layer we had to break through to get up, the between 10.2 and 10.4. And then we've got a ascending trend line, which, again, it hasn't broken in a while. If we see a break there, it could mean a bearish turn in the momentum of the market in general.
I'll put a link to David's full video up above. He goes much deeper into this Bitcoin rally and what might be next, as well as Litecoin's performance post-halving. But that's about it for me, guys. If you enjoyed the video, give us a thumbs up, subscribe for more content, and we'll see you tomorrow.